Good morning and welcome to Market Day Report. I'm Chris Swift. I heard the opening bell ring and I am anxious to see how we're going to start this day. Getting ready for the WASDE report. And it looks like not much better. I got December up a half now, 405 and a quarter. They gave up about 2 cents. March is up a quarter at 423 and 3/4, up a quarter. May down a quarter, July down a quarter, 442 even. See if soybeans doing any better. Bean market still holding on to a few gains. $10 4 and 3/4 cents, up 4 and a quarter. Jan at 10.23 and a quarter, up 4 and a quarter. All the way out to May, up 3 and a quarter at 10.52 even. And we'll see what we got in Chicago. Wheat this morning, it was a little bit firmer, still is, up 8.5. December, 587 and 3/4. March up 8, 606 and a quarter. New crop July, 621 and a quarter, up 7. Kansas City hard red winter wheat, it's a little bit firmer as well, up 6 and a quarter on the D's, 594 and a half. March up 6, 607 and a quarter. New crop July, 617 and a quarter, up 5 and 3/4. And we'll wrap it up with Minneapolis spring wheat here. And Minneapolis spring wheat up 6 and a half on the D's at 623 even. March up 7 and 3/4, 645 and a quarter. May 655 and 3/4, up 6 and 3/4. Now I've got my guest Tommy Grisafi in this morning. He is with Advanced Trading. And Tommy, I know you're somewhere up there in North Dakota. Tell me where you are and what you're doing.
Yeah, I'm up in, actually, I'm in Mayville, North Dakota. I always tell people I'm in Fargo, but Mayville's a small town right in between Grand Forks and Fargo. And I was up at Big Iron. I'm down here in the Ag Bull Studios in Mayville, North Dakota. But we got a report today, and farmers were optimistic. I have great news to report from the Dakotas. We are having phenomenal finishing weather. As you know, crops started to go in here, and then we had weeks and weeks of a delay. And then we had a relatively mild summer, and we were very behind on GDUs. And I think currently I have a farmer next to me, sitting next to me. Where are we at in GDUs in corn right now, sir? We're at about 2350. And how many GDUs do we need to finish the crop? We're at 2150 GDUs right now here in central North Dakota, just north of Fargo, not quite central, but on the east side. And so we're a couple hundred GDUs from finishing this crop. That's important because if we would have had an early frost here in the northern states, Minnesota, South Dakota, and you know, Chris, you're a smart guy. I know you're from the South, but they grow grain in Canada. And we have a lot of viewers and listeners and watchers in Canada, and they finished up well with their wheat and their canola and their beans and their corn. You know, whether they use corn for silage, whatever. So it's good news to hear. I'm not sure what the USDA is going to report, but I am mad at myself. I had a chance to sell or protect corn up 4 cents this morning, and corn's already unchanged. What we do overnight is no reflection of what we're going to do during the day or what the results of this USDA report are going to be. Could be a big nothing burger, could be a little shocker for folks out there watching. Have offers in soybeans up 20, 30 cents. We could get a high-frequency trade reaction. That is where the computers get the number. The second it's released, we may spike up if we get a slightly lower yield in beans. Back to you, sir.
Oh, Tommy, that's great. Stick around with me. We're going to come back and talk a little livestock with Tommy Grisafi, Advanced Trading. Stay with us. Welcome back to Market Day Report. We left yesterday with a little bit higher trade on the market, and I can see over my shoulder that we are adding to that this morning. I got the October fats up 85 at 177.80, just a little bit off the high of the day. D's up 65 at 177.87, and Feb up 55 at 178.87. Let's see if it carries through into the feeder market. It does. We're a little firmer. SEP up 47, 241.02. Still got another $2 to catch the index at 243.04. October feeders up 80, 238.30. Noves up 72 at 234.75. Take a look at our pigs this morning, and hogs are a little bit lower. I got Ock down 65 at 79.10. D's down 75 at 71.55, and Feb down 65 at 75.17. Let's get back to Tommy Grisafi because I got a great question. Tommy, up there where you are, what's your pasture conditions look like, and what was hay production like? If you had such a good growing season for the corn, seemingly like you would have the same for your pasture conditions.
Yeah, great question. So when it comes to pasture, where I'm at, if you didn't know where you were, you'd think you were in an I state. I mean, it's corn, beans, corn, beans. The only thing that looks different up here is that we have wheat that's come off the field. And we have sugar beets up here. Now, I was at Big Iron and I did talk to some farmers from western North Dakota. Incredible pasture conditions. And so when it comes to cattle, when we had that drought here in 21, we moved a lot of cattle out of this area because we just didn't have the feed for them. But phenomenal pasture conditions out west. If someone's out there and they know different, will get a hold of us. But from what I heard at Big Iron, there was a lot of optimism. Even though the markets are down, when you have healthy pastures out in what could be typically dry areas that get 14, 15 inches of rain, when they've been blessed with rains, you're blessed with bushels, and that makes a farmer happy. The markets aren't at the best prices, but as you know, Chris, going back to grains, we have carry in the market, and you and so many others do a great job of explaining what that is, how to utilize it. But if you don't catch the carry, well, you get what's left. Back to you, my friend.
So in that carry, for the guy that's looking to buy the corn, we're looking at the livestock producer buying. Corn is not at full carry. And when we talk about, well, we'd like to buy it today, but we know we're not going to use it till March, that's still storage out there. And so we discuss storage rates. Which is the cheapest place to be able to store corn? And clearly it seems like still the Board of Trade. Is that not correct?
Yeah, when I look at the carry, to catch the carry, the two best months right now are March and May. But if you need corn and just you need ownership rights of corn, stay in the front. You could stay long Dees. You can stay long some options in the front, like a Jan or Feb option. If you need that constant upside as a cattle producer, stay along the front. I hate to see you go buy all that carry. So if you go buy an option and the futures are 20, 30 cents higher, you're paying for that carry and then the right to upside. If you need a lot of length, stay up front. So what I'm saying, a real life example, rather than spend 20, 30 cents on a call way out there, spend 8, 10 cents now, and in a few months, if you have to spend 8, 10 cents again, I think you get a better value if we were to have some decent upside, Chris. Great question.
That's great. That's why we got you on here, sir. I can't wait to see you when you come in town next week. Tommy Grisafi with Advanced Trading. Debbie, back to you.
Yeah, no, that was a gripping conversation. I learned a lot.
I can talk with him for hours. We went and had lunch one day, and we sat there and talked.
Right. Y'all are on the same page for sure.